We're live. Great. Miss Joan. Joan, are you here?
I am just trying to work my camera. Bear with me. Oh.
Just went live.
Okay.
Hi.
Good morning. Do you hear me okay?
Yeah, and you can hear us, I assume.
Yes, we can.
Great. So we're live already. So we'll just go around and introduce ourselves, and then we'll turn it over to you. So welcome everybody to House Energy and Digital Infrastructure. It is Wednesday, April 1st, and we are here to continue learning about the CPACE program and S138. So I'm Representative Kathleen James from Manchester.
Scott Campbell from St. Johnsbury. Richard Bailey, Memorial 2. Chris Morrow, Wyndham, Windsor, Bennington. Michael Southworth, Caledonia 2. Christopher Howland, Rutland 4.
Dara Torrey, Washington 2.
Graham Clutcher, Chittenden 13, Burlington.
Great. And joining us in the room?
Nick Chair, Downs, Rector Mark.
Super. All right. For the record.
Hi, I'm Joan Goldstein, CEO of Vermont Economic Development Authority. And with me, I have two people. If you could put your cameras on, I've got Jennifer Emmons Butler, who's our Chief Legal Officer, and Sam Buckley, who's our energy lender. So I just wanted to, I don't know. I've never testified, I think, in your committee before. So just a little bit about VITA so that you know who we are.
That'd be helpful. Thank you.
Okay, great. So we've been around since the 70s, and we're an instrumentality of the state. The governor appoints the board, and we basically borrow money and lend it out to farms, forestry, manufacturers, technology companies, small businesses, hospitality. We have a very diverse portfolio. Our energy portfolio represents a little bit more than 10% of our portfolio. We've been lending directly on renewable energy. And on the commercial side, we're predominantly a subordinated lender. We work with a senior lender, which is typically a community bank. We are very intrigued by the CPACE legislation. We would very much are looking at this as an economic development initiative. 38 states already have this legislation, and why should Vermont, be the laggard here? We looked at the legislation. We have a few comments. I mean, we are looking at this as a potential lender, and we think there's a good role for us here. Some of the lenders you've already heard from play in a larger space. I've heard people say $1 million was a small loan, and that would not be the case for us. So we are interested. I wanted to just go through the most recent. Would that be helpful, or do you have any questions so far about us?
I definitely want to learn more about the role you think VITA could play and what kind of projects you think you could support through this. But if you want to make more specific comments on the bill first, that's great.
Yeah, so I guess I'll start out with a few things. One is we just were able to get some funding from the federal government for energy efficiency projects. So we have a funding source in order for us to lend. So we think this would fit very nicely. We think this could be either for retrofitting of existing properties or perhaps on new construction. So we do see those two uses. The other use is significant amount of mitigation efforts have to happen because of the enormous flood damage that has occurred in the state over the last several years. And so I think those three things together represent opportunities. I don't know, Sam, if you wanted to add a bit more on that.
Yeah, I don't really have much more to add. I mean, I think any PACE eligible project VITA could participate in. I mean, our energy loan program as it stands we can make loans up to $6 million. So I think we could play a substantial role either working with other, doing deals that, as Joan mentioned, were too small perhaps for the national CPACE lenders to consider, or larger projects where folks are looking for a local lender.
Okay. Yeah, go ahead.
So when I looked at the most recent, we did comment on this in Senate, and some of the things were changed and some were not. So I thought it would be good to go through it. One thing, just to be clear, at the very beginning of the page where it talks about that a municipality could kind of approve a district, if you will, it just mentions renewable energy or energy efficiency, and elsewhere it talks about resiliency. So I just thought, for good measure, to ensure that resiliency or climate mitigation or flood mitigation, however we want to word it, but to make sure that's included. Otherwise, it could be some confusion about whether or not it would be eligible. So, and I do think this could be very useful anytime folks were talking about the flood, the impact of the flood, the mitigation efforts were just not covered by typical disaster recovery funds. So I just want to make that clear.
So,
Further
Joan,
down, yep.
where
go ahead.
was that again? Did you?
Let me just get to the,
And I wondered also, Joan, and I'm sorry I didn't look at our website this morning. Did you or can you submit written testimony? Because it's really helpful. If you guys
sure.
have comments on the bill, to have those in writing is super helpful when we go back later to mark it up ourselves.
Okay, perfect. We will get that to you.
Right.
So in the very first section, it just talks about,
I think you're on the bottom of page 1.
yeah, it just says to secure private financing for property owners relating to renewable energy as defined or to eligible projects relating to energy efficiency. And that's all it says. That. So I just want to make sure that if you want to include resiliency and mitigation measures, that that's right in at the get-go.
Okay.
Yeah, and so, yeah, and then you do further down mention resiliency. So I think the intent is indeed to include those. I want to make sure that we're all on the same page.
Yeah, that is.
Okay. Then I think further down, let me just get to the page. There's a section that talks about assessed value. And I know that others have also commented on this, that if the limit is 90% of assessed value, probably we're not going to get too much. So that's
Yes.
on, and I'm not seeing a page number here, but it's, yeah, further down where we talk about the limitation. It's page 5 of 11.
Okay.
So we think that should be of the appraised or as complete or as stabilized value.
Okay.
And then there's a section about exceeding standards. And I'm wondering why we're going to require them to exceed. Could we just have meet or exceed? That would be one.
Where is that?
Give me a moment.
I think I noticed that too, but I.
Yeah. Okay, it's on page 3 of 11. Sorry, looks like it's the third paragraph. For new construction, certification by a licensed professional engineer or engineering firm stating that proposed qualified improvements will enable the project to exceed.
Yeah.
So I'm just wondering why.
Line 9 on page 3.
Yeah, line 9 on page 3. Thank you.
Meet or exceed. I like that.
Yeah.
Well, and we had a question about the language. The current building code, and I'm sorry, I can't remember how we resolved this yesterday, but how or whether that would interact with the executive order. We felt like we needed to maybe clarify there, unless, does that not impact the CVs?
Yes, it should refer to the commercial building energy standards, and we also wanted to hear from DFS about that.
That's right.
Or at least maybe a comment, that's not necessarily.
Okay. Anyway, we had some questions about that section as well.
Okay.
But I hadn't flagged anyway the exceed, so meet or exceed.
Yeah.
I think, and we were more concerned about meet or exceed what exactly, because all this current
Right.
building code.
Right.
Okay.
And then just one thing, I mean, it's not in here spelled out, but I was just wondering if a use of this would be, do we include stormwater retrofit as a mitigation measure? Because that seems to be something that property owners are all contending with, and perhaps this is a way for that to make sure that that's included as well.
And where should we add that?
Were we thinking that might be covered under the definition of resiliency? Because one thing we noticed is that resiliency in other parts of the bill, there's specific reference, we define energy efficiency and we define renewable energy, but resiliency isn't defined anywhere in this bill.
Right.
Right. So it might be best to spell it out, maybe like what some of the things are included. Otherwise, there'll be confusion. But I was just thinking, I'm approaching this from the perspective of, people talk all about the work that's necessary for retrofit and the expense, and it's difficult to get financing for it. So this might be an avenue. Same thing with the mitigation measures. So, yeah. That's all I had. I don't know if Sam or Jennifer, you have anything else? I mean, I know that they mentioned that Vita's going to determine who's the administrator, but we want to stick to our knitting here. We're lenders and we really want to lend in this space. So would rather not act as administrator. We also want to look and see, how does this get taken up in Vermont? Like, is there going to be significant take up before appointing an administrator, and then they do a lot of upfront work and then there's not very much take up, which I think happened with the residential PACE program.
How do you imagine I am not clear on the administration piece of it. So I know that in some towns, I mean, some of the testimony we heard yesterday indicated that in some or many municipalities, there may only be like one or two or a few applications a year, and maybe just, the town government could just do it. But I wasn't clear on the concept of who you would farm that program administration out to in a city, like a larger district. Like, say, if all of Burlington, is a CPACE district, they're probably not going to want to do that work themselves. So who pays to hire the program administrator, and who actually does that work? I am totally unclear on that aspect of the bill. And so far, the informally, and then just now from you, two of the agencies who might have been tagged as program administrators have been like, well, we don't want to do it. So how do you envision that even working?
Yeah, so one thought was to think about this as a pilot, if you will. So without calling it a pilot necessarily, but let's see how, let's say it's the larger towns that would embark on this right away, only because they have the wherewithal, they have significant property owners that are going to do these improvements. And the lender works with the town to figure out the best way to administer this. I think, a town may want to administer this themselves because they're already in the process of collecting property tax. And others, it's going to be out of the question. So I see in the bill, you make a express statement that if you're a lender, you can't be the administrator. So that would rule out us, for example, trying to learn about what it would take to do the administration. But
Yeah.
I do think learning by an actual example is a better way to go, rather than appointing some agency to do it and then they find there isn't much take up. I guess one example was I immediately thought of Efficiency Vermont, but I know that they worked on the residential PACE and there was like no take up. So you want to avoid that sort of thing, and instead just let's see how this unfolds and what the towns could do, to help. I think Vermont League of Cities and Towns might be another possible avenue. I think as for who pays the fee, it's really the property owner pays all the fees.
Okay.
It goes, and it's also could be borrowed, right? It could be part of the financing package.
Okay. Right.
You know, I think as an example, like, you know, TIF was a very complicated program. The larger towns did it. It took years before we're able to now make something where smaller towns could do it. And they also could outsource the admin, and there's technical assistance provided through people like the regional planning commissions and the Vermont League. So I think, you know, let's see how this unfolds. Let's pass the legislation. I think it's great to be able to take advantage of this opportunity, and yeah, let's do it and learn.
Okay,
Sure.
sorry, go ahead, Scott.
I had a question. The only reference I could see to Vita and program administration is at the bottom of page 7, where it says that DFR shall consult with relevant stakeholders, including VLCT, Vita, Efficiency Vermont, and agencies from other states with CPACE programs, in order to identify appropriate entities to serve as program administrators. So it doesn't suggest that any of those entities would be the program administrators. At least that's how I
Yeah.
interpret.
And I think that changed. I think our stance originally was let the municipality decide who could do the admin, rather than appointing a statewide admin. So this must have just got put in there that we're all going to put our heads together to figure out who would be the
Yeah.
person. Yeah.
Okay.
Yeah.
So this does this seem appropriate to you then?
Well, it would feel odd that Vita would be part of determining who's the administrator if we also want to be the lender, since the
Yeah.
legislation also proposed that if you're a lender, you can't be the administrator. So it's a bit, yeah, it's a bit tricky. I think
Okay.
the assumption, I think people perhaps did not realize that Vita could lend in this space, and I think that's what we're trying to enthusiastically express our interest in, because
Yeah.
it's an opportunity for Vermont, and Vita has stood alongside businesses and property owners for, you know, its inception. So we
So
think this
one
is
other
another extension.
question then. We heard yesterday that these would be pretty secure loans, and so therefore should attract relatively inexpensive money. Do you have any idea? I mean, what sort of terms?
Yeah, I couldn't really tell you right now. I just know that
Very
we did
speculative, I
we
realize,
did,
but
yeah, I mean, we did. So usually our pricing is dependent upon our funding stream, and if we have an inexpensive funding stream from the feds, for example, we usually pass that on to the borrower, with, of course, a spread so that it pays for us and everything. So I couldn't tell you right off the bat. It also depends on the credit of the borrower, and yeah, and the project and the
yeah,
cash
all
flow, etc. So
all kinds of things. And that way, the funding from the feds, can you identify where that's from?
yeah, so I'll let Sam take it away on that. I know that USDA is one bucket,
Right.
and there's another
So,
bucket. So.
yeah, so we've been hesitant to talk about it because we're constantly feel like we're a month away from getting it. We were awarded a loan about a year and a half ago, and we're still always feel like we're closer than ever. It's called the USDA RESP program, Rural Energy Savings Program. It's not specifically outlined for CPACE, but we think it would be eligible for CPACE projects. This is money that the USDA originally and still does have for rural utilities, but because of the uptake from rural utilities was a bit anemic in areas, about 5 years ago, they broadened eligible borrowers to include quasi-public state agencies like us. In fact, the bond bank has already received $40 million of this money. And so we're a little bit behind them, but it's money that basically costs us about 1%, and it can be used to lend to direct to businesses to help the broad languages reduce their energy costs. So that results in projects that are either for renewables, on-site renewables, or efficiency measures. It wouldn't necessarily cover flood mitigation or resiliency, but it would definitely cover efficiency and renewables. And we would anticipate being able to lend that at 4% fixed, which is a pretty low rate. The only hiccup to that money is, and this is hopefully going to be addressed in a farm bill if it ever gets passed at the national level, but it's got a quirk that projects can't be more than 10 years. And so at some point earlier, there was a question of like, what would the terms be? And terms of CPACE loans typically match the life of the asset. So if it's basically a building envelope improvement, it could be as long as 20 years, but our funding source here, that low cost would limit it to 10 years, but we've got some ideas in mind to be able to blend it with our other sources of capital to basically financial engineer, if you will, a longer term amortization. But that would, of course, increase the overall cost of the project because we'd have to blend some of our market rate capital in with that. But probably more in the weeds than you wanted. But
No,
that's
that's exactly what I was asking.
Yeah.
Thank you.
How much was it?
Oh,
Did you?
and one other thing, the market rate capital, can you talk about that for a second? Where did that come from?
Sure. So and I'll let Joan, I mean, I'm not on the finance side, but Vita has various funding sources. But our major source of capital is we borrow on, commercial paper market, and, leveraging the moral obligation of the state to get a slightly lower rate to that. But it's, I think I have to check with our CFO, but I think our marginal cost of capital is about 4.5% right now.
Yes, that's
That's a
correct.
cost
And
to
so
us.
we have like funding sources from bank lines of credit, and we issue commercial paper. So most of our sources are more short term.
Okay, thank you.
I just wanted to, before we change topics, I just wanted to ask how much money that,
Rest,
It's $10 million.
okay. Rep Southworth?
Earlier in your testimony, you stated something, there wasn't much uptake on the R pace. Would you have any information that you could relay to us as what you know about why it hasn't expanded more than it has, or how limited it has been?
yeah, I
I
know
can-
that.
oh,
Yeah, go ahead, Sam. Go
Yeah,
for
I
it.
can take a
Yeah.
crack at that.
Mhm.
One, it's even though they both have the same letters in them outside of the C and the R, and that they in some ways operate in the same way, they're very different products, and in some ways it's a disservice to the C-Pace industry that R-Pace is even lumped into it. And in fact, at one point, I don't know if it's a deal breaker, we're not legislation experts, but we had advocated that maybe any reference to R-Pace be sort of just taken out of this bill and it stand alone. The big reason that my understanding is that R-Pace hasn't succeeded, and it hasn't succeeded nationwide, is how it plays with basically the large mortgage companies, the Fannie Mae, the Freddie Macs of the world. The way them basically being able to, it doesn't work with conforming mortgages that go to be sold, because at the end of the day, you need, as you see in CPACE, you need the lender, if there's a current loan, conventional loan on the property, they need to approve it, which we think is good. And that, from my understanding, is that just often doesn't happen in our pace, or it's very Byzantine, so it can only work for mortgages that banks maybe hold themselves and don't sell. And most banks want that option, even if they do hold residential mortgages, they want that option to be able to sell as a source of liquidity. And so that has resulted in that product not being successful, if you will. So it really comes down to the securitization of residential mortgages, is my understanding.
Thank you.
That would be a big problem.
Yeah. Yeah, Rep Howland.
So is your organization going to be lending out of two buckets here? The CPACE bucket for utility or for energy improvements, and then also lending on the property itself as first mortgager?
Yeah, I mean, I guess we'd have to look and see like what the situation is, right?
You
But
could-
yeah, that could possibly happen. I mean, typically on the property, we usually are a subordinated lender, and it's interesting, on the energy side, we're able to be first. So yeah, we'll have to look and see how that
Yeah.
deal would unfold. But sorry, Sam, you were gonna.
Yeah, I was just going to say, to add on to what Joe was saying, it's really project specific. So oftentimes, especially anything that's going to result in retrofits or adding renewable to an existing property, there's probably already going to be financing there. And Vita typically, as a rule, for the most part, doesn't do refinancing, because we want our capital to be additive. In rare cases, we can if it makes sense for everybody. And so, typically there'll already be existing financing in place for a new construction or a new project. It is possible that we could be in both parts. But again, we're looking to be additive to the private sector. So yeah,
Yeah.
I would view them as just separate. I don't, I mean, I guess there could be an advantage to us just from an underwriting perspective, since we're doing so much underwriting of the project to play in two parts. I mean, something that's somewhat analogous is we administer brownfield loans for the state. And so oftentimes we will do that state money, but we will administer it and underwrite and collect the loans. But then oftentimes there'll be a brownfield loan there for mediation. But if there's a substantial renovation or new construction on the project, we'll also be there as a subordinate loan position to conventional financing. So I imagine it could work that way sometimes.
Rather than me taking a stab, could you tell me what a subordinate lender is?
Oh, it's any lender that has other debt in front of them.
All right, so
So,
second, yeah, so you're
Second mortgage is probably
second or later.
second or later.
Second or
Yes,
later,
I don't know. I think sometimes we lose count. I mean, we've had fifth mortgages, I think sometimes, not our
Okay.
ideal situation, but that's what it takes.
Okay. Great. Well, I'm excited to hear that you guys think you could lend in this space. I actually wasn't expecting that. So that's great. Rep Howland?
Will you suggest that we remove the restrictions of the lender can't be the administrator? I mean, when I go get a bank loan, they sometimes sell my loan, but they still do the collections of it. I still mail it to the same bank. Where they mail it to, I don't know, but they get a fee apparently for collecting the monthly payment.
Yeah, I don't know the impetus of why they put that in there. There might have been some advice from some of the players already in it. I do know one of the folks given testimony yesterday also acts as administrator on some of the ones that they've lent to. So yeah, I don't know. Maybe DFR has a view, and I couldn't really tell you.
Yeah, I don't think I have a
affirmatively one way or
strong
the other.
feeling either.
Yeah.
I think I'm not sure the exact reason why it was put in there, but I did pay attention to some of the testimony in the Senate, and I think it was more of I don't want to say knee jerk, but just a reflexive protection thing to make. I think the word fox guarding the hen house came up or something like that. So I don't think there was any concrete examples, necessarily recommendation. I think it was just a guardrail that was put on to make sure that there was another set of eyes. I mean, in general, I think these programs, at the end of the day, the loan is going to be a private transaction between, a commercial property owner and a lender. So the less sort of, it's two consenting, parties, just like, there's not an administrator, to your point, when you get a home mortgage, let's say a separate administrator, and when Vita makes or a bank makes a loan to a conventional business, there isn't someone overseeing it, directly. So,
Right.
Yeah, I guess we don't have a strong opinion one way or another.
We'll have to see what other states have for take up on this. Because I mean, if a town only has one or two, or a city 4 or 5, it's not a big workload for an administrator. And
My understanding is an administrator pretty much, if the application is set up right, is making sure that the application is complete, all the things that are enumerated in the legislation are there, that the lender is approved to do business in the state, that, the appropriate amount of engineering study has been done there, that the town has the legislation. I mean, it shouldn't be a very onerous task to administer it.
Famous last words.
Yeah, I know. Well, that's why
Yeah,
we
thank
don't want
you.
to be.
Thank you for thanks for the opportunity to
Yeah. Thank you for
testify.
being here.
And we'll get something to you so that you have it on the record of our suggestions.
That'd be great. We'd appreciate that. And we have DFR here. Perfect
Right.
timing. So thank you so much for
Thanks so
joining
much.
us.
All right.
Thank
Bye-bye.
you.
Thank you.
All right, Aaron.
All right.
Great. You've not been in our committee, so we'll just quickly introduce ourselves.
Okay.
Yeah, so I'm Kathleen James from Manchester.
Scott Campbell from St. Johnsbury.
Richard Bailey from Memorial Two. Chris Morrow, Wyndham, Living, Medical Southwest Caledonia.
Christopher Howland, Rutland 4.
Gara Torrey, Washington 2.
Graham Kleffner, Chittenden 13, Burlington.
And joining us.
Nick Chair with Downs Franklin Martin.
Great. All right. Well, welcome to House Energy and Digital Infrastructure. Yeah. I'm sure he'll introduce himself.
Joe Valenti, Director of Policy at DFR.
Thanks, Joe.
Good morning, Aaron Ferentz, Deputy Commissioner of Banking at DFR from Colchester.
Welcome.
Thanks. So yeah, I don't have much remarks prepared. I guess I'd be happy to answer questions that you have. DFR has been asked to testify in this bill in the Senate. There's a provision in there where we'll work with other stakeholders about identifying, the best administrator for the program. And we're comfortable with that role. I think at original testimony, they wanted us to be the administrator of the program, and that's not really what we do. It's not our bailiwick, but we obviously oversee companies that are in the financing space. So we're happy to play that role as needed.
So, do you have, I guess first, just more of a technical question. Do you have any specific, other markup on the bill? Because if not, we could just talk about the administrator part. I'm really curious about that.
I don't. The comments that I provided in the Senate were adopted. So that's where we're at.
Okay, great. What were they?
Well,
What did you say in the Senate?
The original version was just essentially a carbon copy of the residential version. And so there was some conflicting information about, could a lender charge a prepayment penalty, for example? And with residential consumers, the answer is no under state law. The commercial space would like that. In general commercial borrowing, that is permitted under law. And it just said two different things within that new version, things like that.
Okay.
I don't remember exactly. But a few other technical things, but they were addressed.
Yeah,
Okay.
the primary recommendation that we had made was to be clear that the commercial program would be distinct from the residential program that already exists, and that any of the protections that exist on the residential side would remain, but to Aaron's point, might not need to carry over to the commercial side because they wouldn't be necessary or customary for those kinds of transactions.
Okay. So the administrator. So we're getting different opinions. Commissioner Goldstein had suggested that we don't really need, I think what I essentially heard her say is that we don't really need to proactively appoint or consider who could be a third-party administrator. We should just kind of consider this to be informally, like almost a pilot, in the sense that if towns that take this up can figure it out.
Yeah, that's an interesting component. Just to maybe level set a little for you, just how commercial lending works in Vermont today.
Yeah,
Outside of this program,
not our wheelhouse.
not your wheelhouse. So essentially, an entity, in order to make to do any lending in Vermont, either needs to be licensed with DFR or otherwise exempt from our licensing process. Entities that are exempt, as you might expect, are banks and credit unions. That's their job. They have statutory loan authority already. They don't need a special permission. There are other exemptions as well. So Vita is an exempt entity. There are insurance companies that are exempt, and so on and so forth. In addition, a commercial lender who's making loans over $1 million also doesn't need a license from DFR. So we would only be overseeing any commercial lending in this space that was under $1 million. And I don't know how big these deals would be. Sounds like some of them could be fairly sizable. In some smaller towns, like if we're seeing, smaller amounts being the amount lent. So it sort of remains to be seen how we would evolve.
And so the section of the bill on page 7 that says that DFR shall consult with relevant stakeholders, including the League, Vita, Efficiency Vermont, and agencies from other states with CPACE programs in order to identify appropriate entities to serve as program administrators. Is there any harm? Would that be useful work? Should we take it out? Is there any harm to leaving it in?
If the committee feels strongly that there should be a third-party administrator, we're happy to play that role within that. But if the policy choice is that, we don't feel the need to have a third-party administrator, that's not really unlike any existing something on today.
You guys went up at the same time. Rep. Southworth?
Are there advantages to a third party administrator versus not?
I think the only advantage really is just if there's an administrative burden placed on the municipality that's running the program. I in Colchester, our town office may have a little more manpower, sort of people power to really administer the program, but a smaller town may not, I guess, essentially.
Thank you.
Commissioner Goldstein had mentioned that there is a prohibition on a lender also serving as an administrator. Is that a good, in principle, there's sort of it makes sense, but practically, do we care if VITA or some other lender in the CPACE program is also the administrator of the program?
Yeah, I don't know exactly why that was added. I think someone mentioned the fox guarding the hen house problem. As I mentioned, that doesn't exist in the current commercial lending already in the space. So I'm not sure how much of a problem that may or may not cause.
I'm trying to imagine what a program administrator would do. So just thinking about as a practical matter, the bill goes out for property taxes annually or biannually, whatever it is for the particular town. It includes an amount for the CPACE loan for that year, and somebody receives that check. It's either the town clerk or perhaps the program administrator, who then somebody divides up what is the payment on the CPACE loan from what's due on the property taxes and sends the appropriate money to the appropriate entity. I guess that's what the program administrator would do. Is that right? Is
that's basically my understanding as well.
Yeah.
I think there might be during the origination phase some checks and balances to make sure that other portions of the law are complied with. The lenders consented.
Mm-hmm.
The owners of the property received the proper disclosures and notice that this bill requires, et cetera, sort of paperwork and documentation.
So, yeah, I'm sort of wanting to leave this in because, we're hoping if this, it sounds like folks are really excited about this program. It could be useful. I don't want to have the specter of, an unfunded mandate or work getting shoved off on a local town official be a reason that people would object to becoming a CPACE district. If you're imagining somebody sitting in town hall who is suddenly going to be, in the position of being an admin on a loan that's between two private entities, but flowing through the municipality. I think you had said earlier that, if the application is set up right, the admin's making sure the application is complete. I actually do that work in my other job, and it can be a huge pain in the butt, honestly. Right? Like you didn't do, where's this? You didn't turn in this. This isn't proper. I read this over and it doesn't look right. Well, what is that? Where do I get that? I don't know. I feel like any town that would want to do this would want to have the option, especially if they're not going to be paying for it, if the lender's going to be paying for it, to say, you know what, this is going to be super easy for us. We're going to hire Blop to run this program for us. So I actually feel like it's important. Unless there's some technical reason that it really shouldn't be happening. I think it could hinder uptake in smaller towns and get to be a task that gets pushed off on local town employees.
Yeah,
that might take more time than we think.
Yeah, I think a third-party administrator may be able to scale, so if they're serving as that person for multiple municipalities, they'll have more experience with terms, process, et cetera, et cetera. And I guess you could always, during a test phase, include this requirement, and then if it's not being, if it's not helpful or useful or really effective, it could be modified down the road.
But now I'm sort of wondering who's going to do it, because so far what we're hearing so far is that people don't want to do it. So VITA doesn't want to do it. I think we're going to hear that Efficiency Vermont doesn't want to do it. I'd be shocked if the league wants to do it. You guys can't do it and don't want to do it. So maybe the problem is that the bill is saying the lender can't be the administrator. Maybe it should just be the lender.
Yeah, or maybe it's a disinterested lender. You can theoretically get around it that way. I don't know. That is probably the hindrance provision in the bill that's really holding people back.
Okay.
And there's provision being that the lender can't be the administrator.
Exactly.
Okay. Do we have other questions for DFR?
Well, so this section of the bill, on page 7, says basically the DFR will convene a group, consult with relevant stakeholders to identify appropriate entities to be an administrator. Is DFR comfortable with that role?
We are, yes. We've talked about it, and we're happy to comply.
If you recommend that the administrator should be the lender, then we have to change the statute.
Yeah.
Just thinking ahead.
Understood.
It sounds like the administration is prior to any money changing hands, almost like you have to collect these in an application fee and all this work to get everything in order.
Well, I think it's both. There's the work you do during the origination and the underwriting, and then there's the
Right. but
distribution of fees.
Then as the payments come in, because they're calling it an assessment and it's coming through the tax department of the municipality, if it was just a superior loan without this term assessment, then I guess the correlation between the superior obligation with the municipality name on it, that makes us.
Suggesting, would it make sense to divide those two functions, the origination phase from the payment phase? For 20 years or something, the payments are going to be rolling in to the town clerk's office. But dividing that up doesn't seem like it would be that difficult. So maybe there's a difference between all the upfront work for origination and the rest of it.
So in the commercial world, there are prepayment penalties on loans. And is that because of these costs of originating the loan are buried in the interest rate, recovered through interest?
Yeah, I mean, I think, in a normal commercial lending transaction, if we're talking about the amount of work that an entity will have to put into loaning $10 or $20 million, it's a lot of effort up front. And so if someone just refinanced within 6 months, you'll never be able to recoup that expense with that just interest over that period.
You recover recover those costs through your interest, is basically
That's
what
correct, yeah. So there's no requirement that a commercial loan have a prepayment penalty. It's just allowed under statute. So if that is a feature that could be negotiated between the parties.
Right, but it's a catch-22. If they ask for too much money up front to originate the loan, they don't get the applications because they'll go to somebody else who may use the period of time as a risk in the loan.
Theoretically, if those prepayment terms are too onerous, someone may say I'll choose option B.
That's what, okay.
But that's again,
I'm not a commercial
the
buyer.
market working.
I'm not a commercial borrower.
Right, sure.
I've only done residential. Sure. Only done 2, 3, 4.
So yes, on residential transactions, there is no prepayment penalty. You can pay it out whenever you want.
Or a car loan, any personal commercial, personal type loan.
Correct.
Tori? I'm curious, I know that there are energy saving companies where you do an efficiency project for a commercial property and then the savings is kind of returned to you over time. Like, is there any reason you couldn't do both in this case?
I don't think so. I think that's probably kind of why, you know, Vita and those other groups really want to be able to lend, is sort of that they do a lot of this work. They are trying to facilitate that for the greater good of the state. And so financing is also a helpful way to do that.
And I was just curious, like for resilience investments, would there be any savings to the business in terms of their insurance? Like if they were to do some important stormwater upgrade or something?
Yeah,
That pencils out for them?
I don't know. That might be a good factor for them to consider. I think in the testimony yesterday, they mentioned like seismic risks. And so I think in certain jurisdictions, there might be that, but I'm not the expert. I'm sure it is.
I would add on that point that there are states that have been looking at funding climate mitigation and tying it to insurance rates. I think the challenge that we would have is that the number one peril that we face is flood, which is which is largely federal, as opposed to if it were wildfire risk and wildfire insurance were under our jurisdiction, it would be a very different story. Yeah. So it's possible that insurers would see a relationship and price accordingly, but it's not something that we can readily mandate for flood as a particular peril.
Although we may see fires.
That's true.
Got pretty dry last year.
Do you people handle the insurance side of it? DFR handles insurance.
Yes.
So do you have a position in what insurance companies can charge for flood insurance and the like? Is that?
I'm not the person to ask. I don't have that expertise. I can definitely check on it for you, but I know that the federal flood insurance program is really a federal program, it's not really the state.
So when you apply for flood insurance, when you're in a flood zone, you're really buying a federal policy.
Essentially a federally backed policy.
Federally backed.
Very good. All right. Thank you so much for joining us.
Thank you.
And our next is at 10 o'clock, so I think we can go off live and take a look. We'll be back at 10.